Good morning, good evening, good afternoon, traders. Steve here at Logic FX Trading, and welcome to our trading room recording on Monday, the 24th of May, 2021. Guys, I'm going to do a weekly review here today. And for you guys who are in the know, just to jump through and find what you're looking for. For everyone else, I'll probably be going into a bit more detail. Okay, folks, so what we do every day is we go and look at the economic calendar just to see if there's anything in there that would give us an idea of where to go and look for a trading opportunity. And as the days and the weeks build up, you kind of get a picture in your own head, and then you know what to look for. Okay, so today, there's nothing major. Yesterday, there was nothing major. So we're going to the next 7 days. So tomorrow, 25th, Germany GDP growth rate. At the moment, we're looking to see how far the dollar is going to drop before it comes back up again. So we're looking for positive news out of Europe and possibly negative news out of the US. I don't know that we're going to get that. And so at the moment, I'm very, very wary of trading the dollar, because we're kind of getting to that point where at some point in the next few months, it's going to turn and start going long again. When I say in the next few months, it could happen this week, it could happen next week, guys. Maybe it takes a couple of months, but we'll talk more about that when we're on the chart. Okay, so GDP growth rate hasn't come in. Forecast -3, previous -3.3. Very, very difficult at the minute. Everybody's in the doldrums, as it were, or every economy's in the doldrums, hoping to open up. Business climate in Germany, we'll have to see how that comes in. US consumer confidence, 119 expected, previously 121. And then on Wednesday, we'll have New Zealand interest rate. Maybe we can get a direction on the Aussie New Zealand out of that, and maybe the New Zealand, with a bit of luck, they'll not change the interest rate, guys, but they might have something positive to say about their economy going forward, which could get the currency on the move again. And of course, if it comes out negative, it'll do the opposite. So we'll have to keep a keen eye on that. And this is where the movement will come, guys, during this press conference. It will not happen here because this will come in at 0.25%. If it comes in any higher, then that's a surprise, and the New Zealand dollar will take off. We don't deal with the Mexican currency. Then Thursday, we've got consumer confidence in Germany, US durable goods orders, and GDP growth rate quarter and quarter. So see how they come in. None of these are major, by the way, guys. We're really looking for things like this. Price index. This is your inflation. These come in high. Forecast 3. If it comes in any higher, you'll see a move up on the dollar, because there will be an expectation of tapering from the Fed. There were some pretty, surprising numbers over the last couple of weeks. First of all, the ADP jobless came in worse than expected. The non-farm payrolls a few weeks ago came in massively lower than expected. But then we had high interest rates come in. So that's why the market at the minute is very, very difficult to tell which direction it's going in, guys. And then Friday afternoon, this is all Friday then, guys, Michigan consumer sentiment final. We always know it's the last one of the week. And then into the weekend, you've got Chinese and inflation rate coming out in Germany. Say into the weekend, Friday, Saturday, so it must be Friday, Saturday, Sunday, Monday. Oh, sorry, that's Monday next week, guys. Okay. So that's what we're going to be keeping an eye on. Over to the charts. We'll start with the Dow Jones. Things looking quite quiet at the moment. Just running a little bit flat. We're kind of looking for maybe a bit more downside. We do think the next impulsive move will be long. And at some point in the year, and that will be determined by inflation and how that affects what the Fed's attitude is towards tapering and eventual increasing of the interest rate. Any inflation numbers, guys, that are looking bad will make the Dow, the Nasdaq, and the S&P fall like a stone, but particularly those new growth or momentum stocks, as they call them. Inflation kills them because they're all borrowed up to their eyeballs, guys. So inflation goes up, means the cost of things that they're buying goes up, means that the interest rates are going to go up, means their borrowing's going to go up, means their earnings are pushed further out or down, if they even have any, guys. So that's why there's this major movement at the moment into defensive or cyclical stocks. But even those won't be immune, but they'll not drop the way the momentum stocks. And we've already saw some of that. And we have to try and now and look at individual charts and go, well, has this dropped enough for it to be cheap and to start buying in? And that's something we'll look at whenever we do our individual stocks, guys. Okay, so that's the Dow Jones. The S&P will be very similar. Same thing we said last week the week before, we were looking for a correction. We're getting the correction. I just scribble, guys, rather than draw the lines because it's quicker and we've a lot of charts to get through. So if you see me doing that, that's supposed to be a structure line. What we were looking at last week was potentially, because of this structure, potentially more downside and possibly even another leg down that looked like that. So in other words, that could drop right down to there. Now, that doesn't mean we try and trade it to there, but if it does drop to there, that's a much better place to try and go long than there. Now, I don't trade these charts, guys. We use these as an indication of what's going on in the markets. Nasdaq. There is still a danger, although I think it's passing, that there's a possible. That was an ABC back up. We traded that really nicely after having got drawn down here. And when we got to here, this double top, I said at that time, guys, we need to be careful that we don't get a move down into here, because that would give us an ABC on a higher time scale. I'll just do this, since this is the sort of maybe the first public one I've done of these for a while. So you were looking for something like that. Now, obviously, they don't look exactly the way Elliott draws them or the way we look at them when we're learning them or we're teaching them. It's kind of this is a skeleton, and on top of the skeleton, you put the meat, as it were, guys. So the meat is that this could possibly, this structure, and we trade structures, guys, not just individual impulses. This structure could get down and actually break that line, because more often than not, a C wave will break. It doesn't always, by the way, guys, but more often than not, a C wave will break the bottom of the AB portion of the whole structure. So that's why we've got that in, just to indicate to us where the bottom of the V is. And this could well drop. Of course, we're hoping that it doesn't, because it means it would drag all of our portfolios right down into the red. So what I'm hoping for is that this doesn't happen, because the other structure possibly we have is that that's the C wave, if you want to call it that. But you could go and look at it, say, on a 4-hour time scale, and just say, now, that isn't unusual to see that. It's a drop back into there, push back up, pull back down into trend, and then off you go again. So that's entirely possible, guys, that we get that. You know, and it will depend entirely on inflation. If we get inflation, we'll see that drop. Or a fear of the fear of inflation, see that drop. If it recedes, what we'll be looking at later in the week, wasn't there some inflation numbers potentially here? What day is that? Wednesday's the 4 days away, so that's Thursday, guys. On Thursday, if these numbers come in high, we could well see this, wherever it is by Thursday, you could well see it dropping again, guys. So we do really need to be defensive at the moment. I've got out of most of my momentum stocks. I bought into a few again last week, when things started to move up again. But I am aware that they could still drop. But the ones I got into had either not been necessarily affected by this, big things like Amazon and Facebook, or things that had really, really dropped a lot, guys. So we can talk about that. Not today, because it would make this far too long, but we'll talk about it in other videos. Okay, so that's what I'm hoping for, but I'm aware that that could happen, and therefore I'm trading in such a way that I'm being defensive. I'm taking 5% profit at the minute, guys. Why? Because we're in this is on a 4-hour time scale, because this thing is becoming old. Look at it, guys. It's just far too long, far too much. It's starting to taper off. There's going to be a correction. What we don't know is when the correction will come. It could come from here. You know, it could be into August, September, October time before it comes, guys. But there will be a correction. So from probably around here somewhere, I've just been taking 5% profit. In other words, I'm trading. I'm not holding on to anything long term unless I'm stuck in it. You know, sometimes you get stuck in something and you have to hold on to it. So some goes up 5%. Sometimes you'll get 8, 9, 10% in a day on something, or in a couple of days, and then I'll take it off the table. But 5% is my minimum. It's up 5%. I'm taking it off the table. Now, if we got a big correction, I wouldn't be doing that, guys. If we got a big correction, I'd be in for the long term and just let the winners continue to go, and then deal with the losers by getting them out of them because they're stuck or whatever, and moving the money back into your winners. But that's a whole different trading strategy to what we're doing at the minute. Nikkei, same thing, guys, as all the rest, and we're getting this correction. We're looking for a breakout unless something goes drastically wrong. UK index, same thing, guys. These, according to the experts, are really, really undervalued, guys, for several reasons. One is they were all knocked during Brexit. Then they were knocked again with the pandemic. And these are old school defensive cyclicals. They're mining companies, they're banks, they're insurance companies, they're engineering companies, they're oil companies, guys. So if you're looking for defensive, cheap, relatively cheap, according to the experts now, this is one of the places to go and look. And as a result of that, I've got into Rio Tinto, I've got into BP, I've got into Shell, I've got into Whitbread, which is a big pub company in the UK. And they're not going to do fireworks, guys. But if there is a big drawdown in the NASDAQ, these will not be affected anywhere nearly as badly. So in other words, they maybe drop 5 or 10%, but they're not going to drop, 40, 50, 60, 70%, guys. And that's what's been happening to a lot of the growth stocks. Guys, if a company isn't making money, this is no time to get into it. And how do you know it's making money? Go and look at its price to earnings ratio. If it has one, it's making money. If it's really high, you don't want to be near it at the moment. Okay, French, same thing. They're starting to come out of the not coming out of the lockdown yet, but they're getting vaccinated. Little bit behind the UK and the US, but they've set the trend that you can get a lot of your population quickly vaccinated, and you can get back to normal working practices. Not that we're there yet, but we're certainly moving in that direction. So I would expect more upside to there, but from a technical point of view, you'd look for a drop before you try and get into it. Germany, same thing. It's been running flat. It could be some sort of expanded diagonal, guys, but that's not the right word, is it? Anyway, it slipped my mind. But it certainly looks like it's getting ready to go long again. Would you buy in there? No, I certainly would. It would drop, but I don't trade the indexes, as I said. So what you want to do is go and look for some good German stocks, if that's what you want to do. The reason I go through them all, guys, because it gives us a picture of the world economy rather than just the American economy. Chinese, it's been running flat for a while. Now, there is a concern with this, and it comes from Elliott, in that when you get a move like, when you get a move like that, and then you get a corrective period, either it's a zigzag back up or it can be a flat, you often get the second side off it before you start to go long. Does that mean that's definitely going to happen? No. That's why I've got that drawn in there, where it basically said, guys, if this drops down to there, then there may be some bargains to look for. But it's if it drops to there. We don't know it's going to drop to there, but if it drops there, then we can start looking for some bargains on the Chinese stock market, if that's what you want to trade. Can it go long from here? Certainly it can. Certainly it can. As I always say, well, trading isn't painting by numbers, but certainly Elliott isn't painting by numbers, guys, should I say. It's an art. You've got to learn what to look for, when to be wary, when to be bold. Aussie commodity prices are good at the minute. The Aussie should continue on up. From back here, we drew this, guys. Little zigzag down. We said if it got into there, that would be a good place to buy. Now, sometimes I clean these up and sometimes I don't. That's why we've got so many charts on at the minute, or drawings on at the minute, folks. So yes, I was looking for that to come along. Where should you got in? Possibly down there. Yet again, I don't have any Aussie stocks at the minute, guys, but, you know, big overview. And then the Russell 2000, which is your small caps in the United States. It's come up, it's run flat, same as everything else. It's correcting, buying time. Now, the fact that it hasn't dropped means that money isn't really coming out of it, but money isn't going into it either, guys. So it looks like they're waiting to see either, you know, how earnings start to fare as the small caps get, you know, back to full production, as it were. Or they're, excuse me, folks, or they're waiting to see when inflation comes in, how bad it's going to be, and how it's going to affect those earnings. So at the end of the day, it always comes down to earnings, guys. No matter what anyone else tells you, it comes down to earnings. This is all a big different type of savings account for most people, guys. We're trying to jump in and out on the price movement, but the truth is that people put their money in stocks for the dividends. The people who are investing are looking for the dividends. And if the stock price goes up as well, it's a Brucey bonus for them, guys. They're still looking for their 4%, their 5% dividend every year. And that all companies are based on their earnings. Even if they're not at the moment, they're based on future earnings, you know, because the market's always predicting the future or trying to predict the future. So even if a company has low earnings over here, its share price can be like that because, and this is what's happening with the momentum stocks, is that people are betting that their earnings are going to go up and up and up and up. So, but you're already paying a premium. If you pay too high a premium and earnings only get to that level where it justifies, you know, that price, then you're overbought. Okay, so you need to be careful, because if they're too high, the value's too high, the earnings will never justify that price, and then that's where you get the big drop down again, because this is where we really are. This is the real value. That's the projected value. Then a scare comes in, like inflation, like interest rates, like a problem in the market, like a competitor. And then people say, oh my goodness, I'm getting out of here. I'm in the green. I'm selling up. And as it comes down, then the people who are highly leveraged go, oh my goodness, I need to get out of this before I get margin called. And bang, 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 down it comes. And then you're back maybe close to modern or present day values. And then you can start to say, oh, hang on a minute, maybe it's valued at that. And you start to come back up there. Okay, it's not exactly like that, but that's a general overview of how price movement happens in stocks, guys. The VIX, which more or less is an insurance policy against a crash in the market, and obviously as the markets have gone up, the VIX has gone down. But we always keep an eye on it, guys, because it gives us an idea of what's going to happen in the markets today. It's pretty flat, guys. The markets are probably going to be flat today. Certainly in the open, they'll be flat. And then we'll see what happens after that. DXY, let's get into our currencies. What I've noticed about this over the weekend was this is potential ending diagonal, guys, which means there may well be some upside to the dollar. What would be the catalyst for that? Yet again, what we were talking about on Thursday. If those inflation numbers come in high, guys, you'll see the dollar going long in anticipation of tapering from the Fed. Fed's continually said we're not going to do it until we see sustained high inflation numbers above their 2% target. The big thing is, are the numbers we're seeing transitory? In other words, they're temporary, or are they the real numbers? And that's what everyone's arguing about, because nobody knows until something's happened. You know, once you look back, you go, hey, the inflation rate last year was X, Y, or Z. When you're trying to project forward, you don't know. So all you do is you get little bits of evidence, and then if enough people think it's going to go long, then the market will react to that, guys. Or not long, but up. Then the market will react to that. Whether it turns out to be true or not, the market will have reacted to it. So I suspect we'll get upside to the dollar. Will I try and trade it? I don't know, guys, at the minute. I don't know, because we still have this number down here, which is a 127 extension of, I think, of that line, of that fifth line, or that fifth wave down there, guys. And then we had this zigzag back up. But this is running flat from here. That was the bottom of the drop, if you want to go out a little bit to the daily. That was the bottom of our drop. And then from there, we said, listen, it's going to run flat from here. But obviously when something runs flat, it doesn't mean it does that. It'll go up, it'll drop down, it'll go up, drop down. And somewhere in there, we'll have our flat correction. And after we have our flat correction, it'll start to come up. When will it start to come up? Whenever the Fed start to taper, and then obviously when they start putting interest rates up, you'll see the dollar get up. In the meantime, it will go down, it will come up, it will go down, it will come up, and it'll be quite difficult to predict, guys. Just the way it was back. I'm going to show you this here. This was a nightmare to trade, because I was trying to trade it long, and, you know, just as you were sort of getting some money on, on the trade, it would come and go back into the red, then it would go back in the green, then be in the red, then it'd be deep in the. So you're jumping in and out and in and out, and overall it was a nightmare. But we changed our trading strategy since then, guys. So we probably would have done better at that with the 5% trading strategy, which I'm using at the moment. Okay, so this has come down. Can it continue down? Certainly it can. But we're on a daily time scale here. Let's see what happens with this. Is this a wedge, an ending diagonal here? It certainly looks like it, guys. Let's just have a look at the MACD. Oops, that's wrong. It's there. We need to double click. Oh, maybe not. Look, there's no divergence, guys. Normally in an ending diagonal, you get divergence. For example, that. So let's say this was going up. I don't know what's up there, but and it dropped and then went up a little bit more, and then it dropped and then it went up a little bit more. You're getting that's going in that direction. Your MACD's going in that direction. Eventually that will drop. That's not what's happening here, guys. Certainly not in the daily time scale, because that and that are going in the same direction. Ordinarily, if you're looking for that, which would be the upside down equivalent of that, that would have to be dropping, and it's not. Let's go down to the 4 hour. Now, it's dropping there, but that's interesting. Oh, yeah, definitely. Look, there. I think this is going to go long. Am I going to trade it? I don't know yet, guys. Let's have a look at some of the other charts. Euro. Well, we're also looking for a correction here, guys. You can see yet again, up, up, up. Have an impulse. Listen, it's not a beautiful impulse. It's not, but it is. It's not a corrective structure. It's an impulse. And now we're getting this ending diagonal on the end of it. I suspect this will drop. How far will it drop? Well, that will depend on what's going to happen with the dollar. But, Fib retracement. It could certainly fall 50% down into there, guys, and maybe a little bit further, but you could certainly look at it to drop from there to there. Now, this doesn't mean you jump in and you trade it. It means you ponder it, you think about it, you look for other evidence of it. And, if I decide to trade that, then obviously in tomorrow's recording, we'll say, okay, guys, this is the information we've had over the last 24 hours. We're going to go for this. Or I started trading this short yesterday. Can it go long? It can, guys. Certainly it can. But it's certainly setting up to look like it's going to drop. The same with this one, guys. Double top. It's come down. It's come back up. You would not be surprised. Now, it's not a beautiful ABC, guys. If you really wanted to go in there somewhere, there's a possible 3 down there. Coming back up, it isn't nice. It isn't, if it had gone to there, gave us that, and then went straight up, that would have been nice, but it's a bit higgledy-pickledy. So, maybe not. But yet again, if you look at this last part, guys, look at the divergence in this bit. Now we'll clean that up to have a look at it. See, 1, 2, 3. 1, 2, 3. Going up with less and less momentum. If this starts to drop, if the DXY starts going long, if we get a breakout, potentially. Let's have a look at the rest. And remember, you're not trading all of these. You're going to pick the one that you think has the most highest probability of working out. Here, hasn't managed to get up to a double top. And what we say in this situation is, from a way back here, we said this would run flat. And the reason for that was that, it's come up and up and up and up and up. The Aussie's been pretty strong over the last lot of months, guys. And at some point, it's going to take a breather. So we said around here, it will go flat. The problem with this structure is it's in the middle of what potentially is the range. We don't know that that's the range, guys. When will we know that's the range? Well, when it does that and then does that, or does that and then does that, and we've got more points to join up. But at the moment, we're kind of saying, well, we're expecting it to run flat. There's a high point, there's a low point. So we're saying, well, it'll probably run within this. Doesn't mean it can't break down if some news changes, if something happens, like commodity prices suddenly start dropping, guys. Or the dollar suddenly has got massive inflation, which makes the Fed move much faster than they expect. But other than those two things, this could possibly drop down to here with that little move up in DXY. Dollar being that side of the equation, guys. But I wouldn't try and trade that. There's possibly better trades, like the ones with the ending diagonals. And of course, the New Zealand dollar follows the same path as the Aussie dollar, or vice versa, depending on which of the two islands you live. I'm not getting involved in that one. But yet again, you see the same structure, guys. You've had the move down. It's moved back up. It's in the middle of potentially a flat correction. Exactly the same as almost the same as the Aussie. If the dollar goes long, it will drop back down to here, guys. But I wouldn't try and trade that one. US CAD. It's a bit of a bunched up little ending diagonal in there, but you see the same situation here, guys. So I would say maybe a move up to there. I'll not be trading this one. The reason being, oil price is good. Commodity prices are good. I wouldn't want to trade against the CAD at the minute. So it could well push up if the dollar pushes up, but it'll not be the best move that you can get. Possibly the euro or this, maybe. Yet again, there's the divergence, guys. We're on 4 hours here. That divergence is probably more prevalent on the 1 hour time scale. Expanded flat. That's the word I was looking for earlier. It's a long time since I did any basic videos, guys. So, yet again, you've had this move down, but you've had this divergence. This looks like it wants to come up, guys. Doesn't mean it will. What you possibly could do is let it happen and then see if the market then decides that the inflation that made it happen, and we don't know that it's going to happen, by the way, but if it does happen, let's see what the Fed has to say. And if it looks like the market doesn't believe the Fed, then we're off to the races. And if the market says, you know what, the Fed could be right here, then you'll see that. But we don't know which of them, is on the go at the minute. Once we know what's happening, then we can say, okay, we've got a trend in the dollar, which is long. And then we'll start trading the dollar with pleasure, just as we trade it with pleasure coming down here, guys. Okay. And then the yen, very similar to the Aussie and the New Zealand, guys. It strengthened up incredibly there. Sorry, weakened incredibly there because the US dollar's on the other side. This will. Oh, hold on a minute. Yeah. This is on the opposite side. So if we're expecting the dollar to go long, this could well push on up to the top there. Let's have a quick look at the yen index, guys. Now, I'm looking for upside to the yen. There was that drop down, guys. Came into long-term structural line. Doesn't mean it's going to hold, but it's held for the last 6 or 7 years. What was that? 2016. The last 5 years that this structure has held, guys. So what I was looking for was something that looked like that would indicate a move up in the yen. There it is again, guys. Potentially there. So there's 1, 2, 3 times. And then we predict when we got to here, we drew something that looked like that over here. Let me just clean that. See it developing. Now, it doesn't mean 100% is going to do. And if you look back to here, it was a similar structure and then it dropped before it went long. Now, I'm not expecting anything like that, guys. That was the pandemic. That was the pandemic that caused that. So we're not looking for that. But certainly we could see maybe a movement like that or like that on the yen. And if we take that and copy it, where's the copy? In here, isn't it? Oh, that's a better one there. Let's actually copy that one instead. See, and they're very similar, guys. See? So, listen, it's not going to necessarily copy that exactly, but it is a pretty good match so far. where it's come down, it's making up its mind what it's going to do, and then it goes long. And we could even fib it and get an idea of, I don't know how. Don't know if there's anything in this or not, but we just test, guys. So it's come down. There's the bottom. Came back up just over 61.8. That's our reference point, guys. Oh, this one. It happened again. Come up, come down. Oh, that one. Yeah, it's not quite the same. But that one extended beyond the 127 extension. I don't know if there's anything in this or not, guys. We're just looking at it. Shouldn't really do this I should have had this done, but it just came to mind while we were talking. So then let's measure the latest one, and we're looking for a target, remember. We're not trading the index, guys. It's just a target to give us an idea of where the if this goes long, where it could get. Well, it could get up into there, guys. Let's actually take an arrow. Take it up to there, maybe only the 50. So it's not necessarily going to be massive, but it could come up into there. We'll just put that in green. So it's a little prediction. I don't know if it's going to come off or not, guys. But what it does is I've got that now in the back of my head. So anytime I'm looking at the yen, I'm going, hold on a minute, this potentially could go long. So it'll either say to me, hey, yeah, take that trade, or no, be careful. So you go back to the US yen, and you're saying, well, it could do that if the dollar, has the little move up off the ending diagonal. But then you're also saying, well, what happens if this is the point in time when we get that little impulse on the yen? So then you got to say, well, maybe not, because it could end up just doing something like that. It could end up just bouncing along. So that's maybe one that we don't take. Chinese, it's come down yet again. There's a divergence there. It isn't as obvious as the other one. So yeah, potentially this moves up. Yes, Swiss. Now, there it is again. The Swiss has been, well, it was doing my head in last week because I was trading the Swiss short, and it just kept getting stronger and stronger and stronger as gold was going up. Now, back to what we're talking about, the dollar. If there's inflation, guys, you'll see gold going up. And if Bitcoin is the thing that everyone says it is, I know it's having its problems at the minute, and I've bought into it for the first real. I've had a few goes at it in the past, but very quickly, within 24 hours, I've chickened out and get out of it, either with a small win or a small loss. But I did say that if it dropped significantly, I would get into it and hold, or hodl, as it calls it. Hod. I'm a boomer, folks, so I don't know all this kids talk. I'm not down with the kids anymore. What did they call it? I mean, it just seems ridiculous to me. HODL. I know the reason that somebody accidentally wrote it one time, and then it became an in-joke. I understand that. But anyway, so I'm probably going to hold on to my Bitcoin. Even though there's potentially a lot more downside to it, guys. So, yet again, ending diagonal will probably go long. How far will it go long? Well, that will depend in the long term on what happens with the dollar. But just as a structure, an Elliott wave structure, it could certainly come up into 38.2. I'm saying that because of there, and maybe the 50. So there's possibly a trade up there. If I take any of these, we'll talk about it tomorrow, obviously, guys. Gold. We were looking for a setup in gold on Thursday, Friday. We didn't get one. There's a little bit of pullback here. But if those inflation numbers come in high, guys, watch for this continuing to go up. There, of course, structurally, we need to be aware that we've been in this for quite a few months, which was expected because it had gone up so much so quickly. So we got a zigzag back down. And then the debate was, well, was this the bottom? To be honest, around here, I was looking for another one down. Not that we said it would definitely happen, but I was saying, well, if it drops down to there again, that would be the place to start to look to trade it. Finally, I gave in as it started to break here. So I've been trading it here over the last few weeks, guys. When I say I'm trading it, I'm not trading gold itself. It's too expensive. I've started buying into gold mining companies. Kinross. What was the other one? Wheaton Precious Metals. I think that was the two. And then GDX, which is an ETF, gold ETF. So I bought into those. I've been in and out of them over the last few weeks, guys. Made some nice profit. I might hang on to them now in case this inflation thing kicks on. So they're defensive stocks, basically, guys. And those two that I mentioned, the three that I mentioned are all on NASDAQ, guys. So you can probably get those no matter where you are in the world. Some of you might not be able to trade the UK stocks, depending on your broker, of course, folks. Silver, same thing, guys. I've been trading it. I was looking for it to drop. When we were coming down here, we got that little pullback. I said, listen, guys, if it gets down into here, then silver's cheap. We'll look to trade it back up. Didn't get the drop. So when we started coming up into here, I said, looking at the inflation numbers coming up, I said, and all the other commodities going skyrocketing, lumber through the roof. That's wood for anyone in the UK. It's a joke. What else? Copper, iron ore, you name it. They're all going through the roof, guys. So I decided to get into silver, and I've done well out of it. I got out last week as it started to drop again. Excuse me. But I might buy back into SL. It's SLV. I'm not buying silver itself. You need to put $1,000 on, and it doesn't suit my trading strategy at the minute to put $1,000 in silver. So I've been buying SLV, guys. Yet again, it's an ETF linked to silver price. Bitcoin. Now this is the big story, folks. I'm going to put out a little video on this, and I'll put it out on YouTube, because for months I've been saying, and any regulars who are actually listening, as we started coming up into here, I said, this looks like an ending diagonal, guys. This is going to drop. Of course, we don't know that it's going to drop, but what you do is, if you're in it, you take the profit. If you're not in it, you wait for the drop, and then you've got a higher probability that you're going to be right when you try to trade it long again. I can't short it because they won't allow me to short it. The broker won't allow me to short it. So if you want to fib this, let's get out to the daily, folks. I mean, this was so blatantly obvious from an Elliott point of view that this was going to happen. You can see there's the channel I put in, guys. And I said it'll come down into there. Between that, it actually came to the bottom of it. So the impulse kind of started around here somewhere, guys. So we'll just measure the impulse. You don't have to be deadly accurate with these things, guys. It's about getting a feel. Look, 61.8. 61.8, guys. Ending diagonal, divergence, bang. That's what I've been talking about all morning with the DXY, guys, with the dollar. Ending diagonal, still going up, divergence on your MACD, bang, down it comes. Usually I probably said around the 50% mark, which would be halfway between there and there. But we got right down to the 61.8 twice, actually. Overshot it a little bit there, came back up, down again. It's come off it. I've bought in from around here. So I've bought in 3 or 4 times, guys. If it drops further, I'll buy in again. But I'm buying in with very small, 0.5% at a time, folks. So I've probably got around 3% of the account in this at the minute. So you're not going in with leverage. You're not putting your house on it. You're not borrowing money to back it. That's called gambling. It's not called trading, and it's certainly not investing. I don't think Bitcoin is necessarily an investment, but you never know, which was the reason that I decided to get involved in it. The other thing is, for me, if something's already made, when we were here, people were saying it was going to 100,000. And I said, well, maybe it will, maybe it won't. But now that it's proven that it can get to, what was it, 64, 65,000, and it's dropped, well, it set the precedent. So people will say, hey, it can get back to there. Back here, people are saying, how on earth would this thing be worth 64,000? The precedent's been set. And I do this with all charts, guys. When a new, if something's coming up, like, for example, here, if I'd have got into here, when it got up to there, double top, I'd have been out. If I got in here and it come up and hit a double top, I'd have been out. Because often when you get a double top, prices drop. So take your profit, wait for the drop, and then you get in again. What happens when it pushes out? Well, it doesn't matter, guys. You've made your money. Your risk's off the table. If it continues on up, fair enough, wait for the next drop. And there's your next target. So my target initially will be back up to there. When will it get there? No idea, guys. It could be 2 years. It could be 3 years. It could be next month. I have no idea. Hopefully it's next month now that I'm in it. But the probability is, if you want to have an idea of how the markets run, there was the last big move up, which surprised everybody and had everybody talking about Bitcoin. After years of running flat, it did this. Look how far down it came, guys. Just measure it from there. Past the 61 initially, move up, back to 61, move up, on down and down and down. And it ended up, I'm going to have to move it. It ended up 88% retraced, guys. So when everyone's all getting excited about things up here, look at that. I'll show you another few charts like that, guys. Off the top of my head, gold, back, when was the last time gold peaked? Oh yeah, just before the financial crash. There you go, guys. We need to actually go a bit further out because it's a much bigger chart. Let's do it to a week. Look at that, guys. Have you any idea many people were calling gold to the moon back in those days? Can't even get it in on that chart, folks. Look at the fib. Let's do it again. Let's call that the bottom. There's the top. Come down by 50% before we got back to where we were. 50% retracement, guys. But it took from 2011 through to 2015, 4 years before the bottom came, and to here, 5 years before it got back to the previous high. Now, for most people, 5 years is a long time, and the same happened with silver, guys. There's the silver chart. 2010, spike. How far down did it come? 78%. In fact, if you include the pandemic, it was even further, but just under normal circumstances came down 78%, guys. So, you go back to your Bitcoin, do not think for 1 minute that it can't get down to here or here, guys. It certainly can. In fact, if you took this back to there, there's potentially a lot more downside to it. So, be prepared for pain, but at the same time, it could well move long before dropping again, move long before dropping again, and then in 2 or 3 years' time, start to come back up. Guys, if we're lucky, it'll happen much sooner. I'm not hoping that happens, but you gotta be realistic of how things really happen, not just on sentiment, folks. People don't rely on people checking out. People borrow money and then they leverage as well, which is borrowing money again within the system. They borrow money outside the system, from wherever they can get it. Friends, family, mum, dad, bank loan, student loan, you call it. They put it into something that they really believe in. And by the way, of course, at the minute it's all Dogecoin and, there's 101, Ether, Ethereum, Cardano, I think it is, guys. ADA. And that's what makes the crashes. It's leverage that makes the crashes, guys. If you have any sense, trade money that you can afford to lose, number one. Number two, don't use high leverage. Now, I use leverage when I'm trading currencies, because the movements in currencies are very slow and very small percentages. So you need to leverage it up to make it worthwhile trading. But when it comes to Bitcoin, when it comes to stocks, no leverage. Trade your own money, folks. And don't try and get rich overnight, because that's a very good way of becoming poor overnight. Oil's going to continue to grow, guys. It cannot drop from here yet, but only within this flat correction. I suspect it's going to continue to go up there. What would make it drop? Well, if a nuclear deal's done with Iran and the US decides, and their allies, I don't know the exact deal there, but if the US decides to allow Iran to start exporting oil, then there may be an increased supply which could drop it. But it's not going down here, guys. It could drop within a flat correction, maybe even break the bottom before going long. But there's the direction of oil. I don't trade oil. It costs too much to trade oil. But obviously there are certain currencies that get a benefit from it. CAD is one. The US does as well, but it's not a big enough part of their economy to rely on the oil price going up to trade the dollar. Norwegian krona, that's a big one. The only problem is that I found with trading it is that the broker's fees are ridiculous on it, so I stopped trading it. EuroCAD. Okay, let's run through these now, guys. We've done enough blethering. Well, if the and this is if, remember, if the XY pushes up, the euro will drop. Okay, which means the euro will go in that direction. So potentially this could trade on down. I'm a little bit wary of that trend line there. Aussie, it's been pushing up, but yet again, if DXY goes long, then you'll find that coming down. It's breaking out there. So I was looking to trade this up. It could well still do that, but just keep your eye on the dollar. If the dollar starts to strengthen up, this will drop. Euro yen, we were hodling over there earlier. That must have been Friday. We were talking about that thing. It looks pretty tired, guys. That doesn't it? Looks pretty tired. There could be a bit more upside to it, but if the yen goes long and the dollar goes short, then this pair will drop. Remember, it's if. You've got to keep your own eye on things, guys. Euro Swiss. If the gold price goes up, the Swiss will continue to strengthen, guys. So if the dollar goes short and gold price continues to go up, which it will anyway, if the dollar goes long, now, gold's priced in dollars, guys. So when the dollar gets stronger, gold price drops. But if the demand for gold is higher than that drop, then the gold price will still go up. I hope you understand what I mean there. But even being strong, where it is, the gold price, not expecting the gold price to do that, guys. So even the gold price being up there is pretty good for the Swiss. 25% of the Swiss currency is still linked to the gold price, guys. So I was looking for this trade last week. Remember, we're in 4 hours here, guys. I'm not so sure about it today. Of course, I could be wrong about the dollar. If I'm wrong about the dollar and the dollar drops rather than goes long, in other words, if those inflation numbers come in bad, the dollar will drop, folks. So this is the thing we've got to work out this week. Okay. And if it drops, then you could well get that trade. But if the dollar goes long, then this will drop. This is why the dollar is so important, guys, because it shows the direction of so many currencies. Listen, the pound's been, the UK's opening up again at the minute, guys. The pound's probably undervalued still, way back when they had the whole Brexit debacle. I don't like trading against the CAD because I think the CAD's going long, are going to continue going long this year. But just based on this being a completed zigzag and the whole structure being flat, I wouldn't be surprised if that moved back up there. I'm in this trade, but I'm kind of wishing I wasn't because it's been hanging around for a long time, guys, going flat. And I'm in the red at the minute. I don't know. Remember, it's a 4-hour time scale. I can't remember where I got into it, folks, but I got into it somewhere along here over the last couple of weeks. And it's, every time it's about to break out red or green, it pulls back down again. So at the moment, I wouldn't recommend trying to get into it. Pound Aussie, we're getting a bit of a push up there. From way back here, we said this pair would run flat, which is what it's doing. Run flat meaning it's going that way, then it's that way, and it's that way, and it's that way. That's what it's doing, guys. Possibly it could push on up to there, but I wouldn't try and trade it for that. Look at that yet again. Possible little ending diagonal there. That's why we drew this in on Friday. Looking for it to drop. Am I going to trade it down there? I'm not going to trade it at all, guys. Pound New Zealand, same thing, guys. Running flat from way back over here. Possible upside to it, but I'd look, remember 4 hours, I'd look for a setup to maybe trade it up. Pound Swiss, another one that's difficult to trade. Looks like it wants to go long structurally. But yet again, with the gold price, if the gold price gets stronger, guys, the Swiss will stay strong. So even if the pound goes long, this pair will just continue to move like this, back and forward. So not necessarily a good trade at the minute. Now, if any of them break out, then maybe we say, okay, we have our answer, off we go. But pound euro, possibly more downside to it, depending on what the dollar does. If the dollar, now if you look at this, guys, oh no, sorry, I've got this the wrong way around. When I trade this, it's euro dollar. On eToro, it's euro dollar. Sorry, I got mixed up there. Well, listen, it's running flat because the euro's been strengthening and the pound's been strengthening. So from around here, it's been running flat. It's at the same price now as it was back in February. So it's gone nowhere. And it'll probably just continue to run flat. So I don't particularly want to trade it. Pound yen, yet again, I would love to trade it long, but on Friday we said look for the drop. There's the divergence. There's a potential ending diagonal. It's not beautiful, guys, but you've got a peak there, and a peak there. You've got a drop. It's just gone into the slight red there. You can see, looks like it wants to drop. Aussie yen. Looks like it wants to go up, but yet again, guys, with that work that we did there in the yen, would you try and trade that up? Maybe not. Maybe not. There's not a lot on that I fancy at the minute, guys. Aussie, New Zealand, I love trading this pair, but at the minute it's running flat, so I'm not doing anything with it. Aussie Swiss looks like it wants to come long, but yet again, what's going to happen to the gold price? If the gold price, now Aussie does, gain from the old gold price because they mine a lot of gold, guys, but does that offset the 25% that the Swiss is connected to gold? No, it doesn't. So potentially the Swiss continues to strengthen against this. Now structurally, it looks like it's come into the bottom of the chart. Now, guys, at the moment, I don't see a lot to trade. In fact, for the last couple of months, currencies haven't been, great to trade. But there will come a time. I mean, from the drop last year the whole way through, absolutely fantastic because we had a lot of movement. But we're kind of getting at that point where the markets are waiting for somebody to start tapering or somebody to start cutting their interest rate or increasing their interest rates, and then you'll see some movement. But it's been a race to the bottom. So potentially up there, but I'd be wary of it. Aussie CAD. And by the way, guys, you might think this is a waste of time. I could be saving you a lot of money here by just putting a little bit of a doubt in your head about a trade that you were about to take. So remember, there's that side of trading as well. And in my mind, defensive trading is much bigger part of trading than getting it right. In other words, either getting out of something or not getting into something and saving your money is just as important as getting into something and getting it right, guys. Because getting into something at the wrong place will drain your energy. It'll drain your confidence and you'll start to feel stupid. It happens to us all, guys. I still do it. Last week I got into, what was it I got into last night? New Zealand wasn't last week, it was the week before, the week before that. New Zealand, Swiss, all looked good to go long, and then gold started going up, Swiss started getting stronger, went off in the wrong direction, and for 2 weeks, every single day, I looked at that thing and went, you're stupid getting into that. Now, truth is, it was only a 1% trade, wasn't a big deal, but it just burns you. It burns you, guys. So try not to make mistakes. Listen, that's not right. You'll always make mistakes. Try and limit the mistakes, and when you make them, recognize that you've made one and get out of it. Okay, Aussie CAD looks like it wants to do that, guys, but yet again, this will well, I say yet again, this has nothing to do with the dollar. We had this big move up. We were looking for a correction. It's getting close to coming down into there, which was a target from up there, guys. But guess what? I didn't have the courage to trade it. And with hindsight, of course, I should have traded it. So what do you do next with it? Ooh. I don't know. Leave it alone. That's what I'd do with it. Until we get an idea of what's happening with it. Swiss yen. Now, this is a great story here, guys. Need to go out to try the daily. Yeah, daily will do it. So for 5 years, this pair ran flat within there. So when it came back up to here, and possibly even there, I was trying to trade it short. Remember on the daily, and this took weeks. You can measure it very, very easily. Long as this whole thing here, 140 days, guys, from there to there. So it took not just weeks, it took months. Trying to trade it short, getting in, checking it out. Why was it trying to trade it short? Because it was a pure technical trade. In other words, every time the last 5 years it's got to this sort of level, it's always pulled away dramatically. I can't remember whether I traded that or not, but certainly in here, tried to trade that and tried to trade that for that reason. But it just wouldn't go, it just wouldn't go. And then I started looking at it differently, and I drew that channel in, and I said, you know what? This, we'll just leave it parallel at the minute, guys. This structure is potentially very different to those structures, and therefore there could be more upside to it. So when it broke out of here, I didn't suddenly change my mind and start trading it long, but I just said, well, that's it. I'm not trading it short. And this is back to the defensive-ness, guys. I went on to eToro and something like 80% of traders were trading this short through here. Now this is daily, so for the last 3-4 weeks, I don't know if it's still like that, but certainly a couple of weeks ago they were all trading this short, guys. And I said to myself, these guys don't understand what's happening here. It had broken out. There was the breakout. It's blatantly obvious. It's gone. So that trade was over. It was done. Wasn't going to happen, guys. So some, bright sparks have taken the chance and traded it up, and they've done well out of it. I just said, I'm not getting involved in this until I'm sure of the reason why it's happening and what's going to happen next. Well, you can see there what I've been looking for now. We'll go back down to, let's go to the 1 hour, guys. So it's come up. There was an opportunity to get into it. There was an opportunity. Not so much this. This looked like an ending diagonal to me. And I said, well, we could get a drop here. So this was my attempt at. Now, the reason I'm getting into these in more detail today is because I'm going to put this out on YouTube. And it's a weekly analysis, folks. And ordinarily, we'll run through these very, very quickly. Looking for something like that. Listen, it doesn't have to look like that. It could just drop like a stone before going long. But if you got something that looked like that, that's always easier to look for a setup to go long, guys. So why am I not trying to trade it? Well, because of everything we've been talking about, gold price, the potential for the yen to go long. If the gold price goes long, Swiss will continue to go up. But we're also looking at that yen chart and we're saying, well, it could go up. So the whole thing could just turn into a big flat in here somewhere, guys. And that's not really what we're looking for. So at the minute, I'm leaving this alone. CAD Swiss. Now, CAD Swiss, I traded beautifully. In fact, I don't do very many charts anymore, guys. I do need to do them, and I will start doing them again. But I put this one out a few January. Oh, is that how long it is? February. I haven't put a chart out since February. This is when we were doing really well on the CAD Swiss, and we've been trading it all the way through here because that was the bottom. That was the big drop, and it had been way overdone. And remember, the oil price went below zero. That's when that happened, guys. And from there, I said, well, there's only upside to the CAD, and there's only upside to the oil. So we started trading, and obviously went through this. What was that? Oh, a little summary. So I've been trading this up, getting 5% out, waiting for a correction, getting 5%, get out, whatever, and then waited for this to pass, and then traded up here. Anyway, when we got to this structure, I put this chart out and I said, guys, this is going to go long. It'll go long to the top of this, and then it'll probably correct, but ultimately on a higher time scale, it's going to get to that target. Oh, yeah, run. These stopped running after about a year, guys. So look, wasn't that beautiful? No, but now the target was there. It's actually exceeded the target and it's pulled back down. That's the CAD getting strong with gold. So if we go back to our normal chart now that we've looked at that, is that chart finished now? It's finished. That chart only ran to there, folks. This bit isn't showing. Let's look at that again. There's limitations in these charts in TradingView, folks. Oh, sorry, that was the wrong one. That was our call on the euro dollar. I called it long from here. Said here that there might be a bit more downside, but later that day we got the break up, and then it came up to there, and then from there we called it short. So you can't set these things to go right. My trade was done by then. I was hoping the trade would come back up to the top, but as it come off there, you would have got out, so you would have still made money on it, guys. Yes, it looks like we were wrong, but I wasn't trying to project it right through the year. That was the projection that we'd call, guys. Okay, back over to this one. Yeah, it's finished there because it's currently on the way back up at the minute. See that bit? That isn't in. Okay, so what next? Well, yes, I'm keen on the CAD, but at the moment with the Swiss strengthening up, there's the possibility, especially with a double top in here, there's the possibility that this drops maybe to there, maybe in a little bit further, guys. Am I going to trade that? No, I'm not, because I don't know that the gold price is going to go up. I don't know that the Swiss is going to go up with it. So what I'll do is I'll allow that to happen, and if it gets either to there or to there, maybe I start trying to trade it long from there in case it turns out that it's going to run flat. But there is the possibility that it'll break down a little bit more. So you need to trade it in such a way there that you give it enough room that you don't get stopped out by the time it gets there, because it might start coming back up. So you trade it long from there and there again, and then you're zero by the time you get into there. Yeah, and then you're making money once it crosses over there. But it hasn't happened yet, so it's a big if then. There isn't a lot set up at the minute unless you're going to trade that potential ending diagonal on the dollar, folks. CAD yen, same thing. We're looking for that push in the yen, so I wouldn't try it. Can this go long? It can, guys, but because of that yen that we looked at, there's the potential for it to drop. I don't want to try and trade it down. Today, I'm not thinking about trading it down. I might change my mind as the week progresses, but at the moment, no. If the oil price dropped within the flat that it's in at the minute, that could give us a little bit of downside to the CAD. And then if the yen goes long at the same time, then you could get that. So maybe I would try and trade it down. But I'm more inclined that the trend is up. And therefore, what I would do is if it dropped to there, I would look to trade it up again. That's the same with this. That's not the trade for me. That's the trade. New Zealand yen. Now, for me, yet again, this trend is up. But we need to be careful because it's well developed. It's come into this level. Now, it's not an exact. Don't be looking for exact, guys. It very rarely happens exact. You could probably put a wee bar across there and say that's a double top, triple top. Now, if we go back and we look at what one was it? Yeah, Swiss yen. And we take a look at what happened back here, where this had come up and set up a quadruple top or whatever it was, obviously over a much higher time scale. Eventually it broke out. If we go back down to here, which one were we talking about? New Zealand yen. Now, smaller time scale, because obviously we're on the 1 hour time scale here. But it's tested it once, twice, 3, tried to break through 4, 5, 6 times it's tested it. So I think that eventually this will break out. Do you trade it long from here? Possibly. And look at that structure, by the way, guys. So this is maybe a pullback within that structure back to the bottom of the trend line, and then you start to go. So why aren't they jumping into it to go long? Even there's an ending diagonal possibly in there on maybe a half-hour time scale. Well, I only take things. I've learned to only take trades that are highly probable rather than speculatively probable. And I don't see a lot of those at the moment. But, there's loads of other things to trade, by the way, guys. But going through these every day will teach you Elliott, which we also apply to our charts for individual stocks as well, by the way, guys. Little ending, coming to an end, doesn't want to drop, doesn't want to go up. You start to get that lack of momentum, and then eventually it goes. If that will only happen, guys, if the yen doesn't go long the way we talked about earlier. So I'm still a little bit wary of it. Okay. New Zealand CAD. Same thing. We've been pointing it out last week. It's dropped again, and that's, a bit of divergence there. It looks like it wants to go long, but then you're trading against the CAD, which I'm worried about. But you can see how many times I've called it long. And it's a structural trade, guys. Fundamentally, I don't know why it would go long. And I'm trying to get structure and fundamentals together. That's when you have a highly probable trade. So structurally, why am I looking for it? Because I said this pair would go flat way back over here. From here, I said it was going to go flat. Now, it's come down much further than I thought it would, but nonetheless, it's come down into this sort of level, guys, so there might be a little bit more downside to it. And then, I suspect this pair will float around. Now, that doesn't mean it's going to go directly to there and directly down, but if you look back in 6 months' time, I think it will still be within that range. So it could move up and down, and then eventually get to there and then come off sharp, and it'll be in that range for the next lot of months, I think. So when will I trade it? Well, if it breaks out and we know the reason why it's broken out and gives us a setup, then I'll try and trade it up, guys. And New Zealand Swiss, this is the one that tormented me for weeks, and then on Friday I just decided, right, I'm getting out of this. And then just after I got out of it, we had a spike up, and I thought, oh my goodness, is that going to happen to me? But it's gone back down since, and I'm glad it's gone back down, because listen, when you close a trade, forget about it. Don't beat yourself up. If you got it wrong, you got it wrong. If you got it right, you got it right. Close it, move on. Don't dwell on the fact that it's, if it keeps going in the direction that you wanted it to go, don't dwell on it, guys. There's nothing to be gained by burning your positive energy. Don't let the negativity draw you down, folks. So I got long in it here. I've been trading it up, getting out, drop it up, getting out, So when it dropped to there, I got into it again. Or maybe it was there, guys. I can't remember exactly. And then it did this. And it came back up, and it was in the green. And instead of taking it and getting out, I thought, oh, well, here we go. It's going to go. Nope. So it did this and this and this and this. And when it got down to here, I thought, I've had enough. I'm out of this. So I got out the other day. Will this eventually come up? Quite possibly. But I'm not as sure on it as what it was a few weeks ago. And why is that? Because of those inflation numbers out of the US, guys. Because the gold prices started to go up. This I was trying to trade back. Remember we talked about the gold price? When the gold price was around here somewhere. Because of that structure that it had been in, and because there wasn't any big news about inflation, when we got to here, I thought, well, it's dropped again, it's pulled back, it's going to drop again. And then from there, we'll look to trade gold up. Gold did that. And of course, the Swiss did the same thing. And you go back to that. So why did it get out? Because I'm expecting gold to continue to go up. And therefore, the Swiss will possibly continue to push down. So I just decided I'm out at this point. Is that definitely going to happen? I don't know that. But that's the reason. So it was a defensive, let me get out, because I think we're starting to look like we're going to continue to drop here. I'm going to leave that on like that, just in case something happens, the alarm goes off and you come and have a look. Why did that happen? And I don't particularly want to trade it in that direction. Okay, guys, quick look at GDX, and then that'll do us for today. Started trading GDX. I don't know if I'm still in it or not. I've been in and out of it a few times over the last few weeks. Oh, there's a dog fight in the street. I don't know if this mic picks up the dog fights or not. But there's one every morning around this time. look at that, guys. That's accelerating. That's getting stronger as it goes up, as opposed to getting weaker. So we're not expecting that to listen, it can get up to a point and then come off. We know that. But at the minute, there's nothing in there that would entice you to trade it short. That we saw that, started to break out, and that's where I started getting involved in GDX, guys. That's my only trade on gold. Oh yeah, and the gold mines. Got into the gold mines, guys. Okay, I think that'll do us for today, guys. I know that's long, it always is, but you're trying to explain, what's going on. That's why we only do this long one once a week. And then the daily ones are going to be much, much shorter than that, where we focus in on mainly the dollar and then anything else, maybe a couple of trades. And then we'll do individual recordings on, particular stocks. This stock is possibly going to go long because of this reason. This stock is overbought and you need to think about getting out of it for that reason. And we'll do that. And then we'll do the educational stuff as well. Okay, guys, that's it for today. Speak to you all again soon. Bye for now.